Hello and welcome to The Hindu. I'm Kunal Shankar. For the past month, India, much like many other oil importing countries, has faced varying degrees of supply shortages of either crude oil or, in India's case, a more acute shortage of liquefied petroleum gas, that is, cooking gas. India imports about 60% of cooking gas needs and produces the rest largely as a byproduct of refining crude. And the 90% of the 60% actually comes from the Strait of Hormuz. The February 28th joint attack by the US and Israel on Iran has led to devastating impacts across economies and their markets. Now, to discuss its impact on the Indian market, the rupee, and several sectors, we're beginning a series of conversations here at the Hindu. And to kick this off, I'm joined by my colleague Lalatendu Mishra, who joins us from Bombay, where he has been tracking the Reserve Bank and the markets for decades now. Lalatendu, thank you so much for making time for this conversation. Like I said, this is really to make sense of all this uncertainty, chaos, supply chain bottlenecks that's been going on, and it's really rocked the markets, hasn't it? So maybe if you can just begin by capturing the ups and downs of the rupee in the past month, and then we can probably look at the rest of the market as well.
Thank you, Kunal, for having me here. This is very challenging times. The Reserve Bank of India is now started taking, the imports and the price rise that is happening because the credit policy, the monetary policy will be the meeting, will MPC meeting will be happening from 6th, 7th, 8th, where they have to take a decision because prices have risen across the board. Recently, I met very senior RBI official. That time, they are not so much of concern because nobody knew the war would be dragging till today or will be going forward. So,
Obviously. Yeah.
so there are a lot of concern right now. A week before the MPC meeting, they collect all the data. They have already started collecting the data. So that will reflect in the forthcoming monetary policy. Now,
Right.
coming back to your question,
Yeah, just to contextualize, you're talking about the cyclical monetary policy committee meeting of the
yeah,
Reserve Bank, which sets the rate setting committee, which sort of decides based on the inflation and various other
inflation or growth,
parameters.
yeah.
Yeah, for the
And
credit.
we are expecting a rate cut because it was due, but nobody knew that Mr. Donald Trump would start this war, and there are concerns that they may go for a rate hike because inflation is now going to go up.
Right,
So now
right,
coming back to your question on the rupee is actually very impacted so much. From beginning of the year, it has come down by 4%. Today, I was just checking the rate before joining here. It was trading about 94.28, 94.28 against the dollar. You know, and a lot of analysts are now predicting that it may go to 98 or 100. I was reading another international report. They say rupee may go to 110 or 120
right, right,
in case the war drags on. So it is putting a lot of pressure. And RBI, the other day, I reported about it. Rupee had crossed 94.11, and the RBI aggressively intervened. They always say we don't intervene, we allow the rupee to fall, but excessive volatility is their responsibility to control it. So
right,
whatever high increase happened in the day, they brought it down. So today,
right,
and the previous governor was very conservative. He was always very vocal to talk about how the forex reserve. They say it's an umbrella. So whenever the rain comes, you have to open your umbrella. But this
right.
governor, he has allowed rupee to have found its foot wherever it is. But RBI is intervening. We have seen that the latest number are $709.75 billion forex reserve. We have that of
Right.
mid March. So there
Right.
are headroom to handle it right now.
Right. So yeah, absolutely. As you said, historically, it's India has had for some time now a really high level of foreign exchange reserves, and that's sort of provided a cushion for the economy, and it's really bolstered our standing globally. It's brought us favorable interest rates at international financial institutions, but a lot of India is a heavily oil importing country. We are one of the largest oil and cooking gas. We're the second largest cooking gas importers, liquefied petroleum gas, and that's really where the supply crunch is more acute. All of which we pay with the dollar. So the fall in the rupee directly correlates with the dollar becoming more expensive. And once that happens, and with skyrocketing oil prices, crude oil, which has crossed 110, I believe, US
Yeah.
dollars, or trading at least higher than 100. Of course, it fell after the 5-day truce that was, or rather ceasefire, that was announced by the US President Donald Trump. Um, the outlook is worrisome in terms of how much we may have to pay to secure our energy needs, isn't it?
Yeah, yeah, yeah. Correct. Absolutely. Before when the war broke out, I mean, RBI and the markets also, they priced in dollar at 90. 90 they could have adjusted and managed, but now there's a time Brent crude went to 120. You said it is now around 107 to 110. There's no certainty. Iran is very different. I don't We don't hear any signs of any ceasefire, or so we don't know. It may go a prolonged war, and as you said rightly, there is we are paying. The value of dollar has gone up, so we are paying more for that, and the price of crude oil also gone up, and also because of the global uncertainties, and our stocks were very highly priced for several years.
Right.
Portfolio investors are exiting. In the last say about 3 months, they have taken away about 1 lakh crore worth money that was here. So all that is all putting pressure on the rupee, and as the global economy goes for further trouble, there will be, everybody will doubly think about the emerging markets, where India is one of them. So,
Right.
unless we have fresh capital flows, it will impact our current account deficit as well, because money is going. We are paying more for all these 10 years. We have been talking about renewable energy, renewable energy. I don't know where is the renewable energy backing us right now.
Right. In fact, I just spoke to our deputy science editor Jacob Koshi for the climate economy just a while back, where he was talking about how the latest nationally determined contributions have been announced, and India has set a target of 60% of renewables installed capacity by 2035, while we've already crossed 50% now. But the challenge really is um, how we incorporate the renewables capacity into actual usage, into actual production, because we still what we consume as electricity is still 75% driven by coal. So you're right. I mean, we are in a heavily sort of fossil fuel slash oil dependent economy. So talk a little bit more about the markets. You just spoke about how foreign portfolio investors have been exiting. Give us a fuller picture.
Yeah, see, the markets have come under a lot of pressure. We have been in a bull market for a fairly long time,
Yes.
and there were companies who were traded at 45 at PE ratio, uh,
Hmm.
and
Hmm.
we are celebrating once upon a time. But now that has become problem for us, which are very expensive. So foreign portfolio investors are not buying it, and
Yeah,
all the
basically
mutual fund guys are.
what you're trying to say is that Indian stocks, the companies which are valued which are traded at the stock market,
Yeah.
have a much higher valuation
Higher
than.
value, yeah. For no justification. It's
Right.
only some lot of retail investors, for whatever reason, they came to the market, and mutual fund, they mobilize money through SIP, and all that is institutional thing is supporting for unrealistic valuations. Why would a
Right.
loss-making company having no track record going to the stock market? and its PE investor sitting abroad, he sells it, and we are
Right.
buying all those stocks for exorbitant valuation. So that
Right.
has created a catch 22 position for us right now.
I see.
Stocks have valued very much. Foreign institutional investors or portfolio investors, they are finding value elsewhere rather than coming here. And because of the uncertainties, markets are falling. There are a lot of selling pressure. I just collected some data. The Nifty has fallen about 14%.
14%.
14%, and the Sensex has
That's a massive fall.
about 15%. So analysts, they're always, they want to give some positive picture. They want the stock prices to go up, but the
Right.
reality is that it has fallen so far. And as I told a little while before, portfolio investor, foreign portfolio investors have pulled out about 1 lakh crore rupees from the market.
Massive.
Okay.
Massive.
Yeah, and the markets have become very volatile in the last
Right.
2 3 days, and I can see the desperation of the market people who are involved in the market. Any good news that is happening, they're trying to cling on to that and trying to take the market up,
Right.
because in the
Right.
last so many days the market lost about 2%, 3%, 4%. So now they're trying to, and several good company stocks which are obviously overvalued, now they have
Yeah.
come to a very affordable limit. So I'll just give a perspective. The Sensex today is now doing about 75,000, little hither
Hmm.
and thither. And the 52 weeks high was 68,000. So it has fallen about 11,000 points, the Sensex.
11,000. Right.
Yeah. And the Nifty, the all-time high was 26,358. Today
Hmm.
it is trading as 23,306. It must have gone hither and thither before I wrote it down.
Yeah.
So it has come down by about 3,000 points. The
Right.
Nifty
Right.
has come down by 3,000 points, and the Sensex over 11,000 points. And we don't know. I was going through some analyst data. They're saying the Nifty may come down to 19,000.
Wow. That's a significant
So
fall.
think about
Yes.
and they have given the guidance
80.
that
Yeah.
this year, 2026, and Nifty should be doing 26,000 as compared to the previous guidance of 28,000. So
Major erosion of
there is
stock values.
absolutely, yeah,
Yes,
yeah,
yes.
yeah.
So aside from the markets, Laltendo, talk to us a little bit about, Bombay is our financial capital. Uh, i- i- the acute, uh, what appears to be cooking gas shortage, mainly for commercial establishments. How has it hit, restaurants and hotels there? I mean, it's a bustling metropolis, one of the world's biggest. What's happening there?
Yeah, yeah. See, as you said, Bombay, you have a lot of migrants, who are dependent on outside food. They don't have a home to cook or anything. And because its jurisdiction is very close to Gujarat, the Gujarati people, they always in the evening they will have something outside.
Right.
They love, they're fun-loving people. Even the local people, the fond of vada pav. So many people live on vada pav and bananas because uh,
Just right.
there are a lot of poor people who can afford to have a good meal. So they're all dependent on either the roadside stalls or the eateries. The
Mhm.
government is claiming, I'm very surprised to say that there is plenty of supply. Then if the plenty of supply, nothing to worry, then why you are going to the parliament and saying that we are going through a tough time?
Right.
So it's playing out on the street. Whatever you say, it's playing out on the street. I have seen some street side vendors who were earlier getting 5 or 6 dishes.
Hmm.
They cut it down to 2 3. For example,
Right.
an idli can be done at one time, but a
Hmm.
dosa has to be done continuously. So you have to keep
Right.
burning the. So
The, the
they
stove.
they they reinvented thing how to keep their business going. The
Right.
other day I was going to, there's a guy in the roadside stall. He was doing some Chinese. We have 2 3 types of say veg fried rice, chicken fried rice, or whatever you're doing, chow means.
Hmm.
All of a sudden, he said he's written veg biryani, 100
I
rupees.
see.
So I asked him, he said, "Sir, I'm now planning to go back. We came 2 months back, me, my cousin from the North India, one of the states. We thought of now it's time to go back. We are now cooking through firewood. So we are
Right.
now maybe coming back to
Gone
the,
back to firewood.
yeah, yeah.
Yeah.
And
Yeah.
today you have seen the demand for coal is going up.
Right.
So, and they can't afford a 4,000 rupees cylinder, which is available
Right.
in the black market. So, it's not that black marketing is not going. And these people are scared. There are plenty domestic cylinders available in the black market,
In the
but
black
they're
market.
scared by the government's rule that if they are caught, they will go for 6 months jail.
Right. Right.
So, firstly, there are a lot of uncertainty has played into that, to the system. Prices have gone up, and people don't know what is going to happen.
Right.
So these are
Yes.
the main thing I saw on the streets that I thought of reporting.
So clearly, the government invoking the Essential Commodities Act itself was an admission that there is a
Yeah,
problem,
yeah, yeah, yeah.
and that they are, rationing supplies to the domestic market, households particularly. Although the government has been claiming that about 50% of commercial supply to pre-crisis levels have been established. Um,
Now they're talking about a COVID-like situation. I'm sorry, sorry for interruption. COVID-like
yeah.
situation. Be
Right.
prepared. What is this? You're saying that we have got everything for 60 days, 80 days, 90 days. Then why this?
Right.
And you
Why
are
this?
running double engine sarkars at so many states. Why you are not cobbing the black marketing?
Right, right. And in fact, our colleague Sharad has just sort of listed a story, as we would call it at the Hindu, where he's talking about the government now mulling ideas of paying local currencies for the oil imports to sort of try and save the dollars that we have, the foreign exchange reserves that you spoke about. Interesting times. I think to close, you had written a story about how small businesses, which dominate the gem and jewelry sector, have been really badly hit. So maybe touch upon that. I mean, and it's a lot of it is centered in Gujarat, close to where you are.
Yeah, actually, Middle East or West Asia, that is called, they're very cash rich.
Yes.
Every country, they have got plenty of money. The petrodollar they earn. So that is a good market. For several years, Indian gem and jewelry industry, obviously bulk up is SMEs. They've been dependent on the US market.
Right.
Uh, and because of the tariffs and the uncertainty that happened, we all, with the support of the government, we went for searching for new markets. And all
Right.
these free trade agreements that we signed, was given a good impetus for exports to those markets. And Dubai has become this region's best, possibly the import export trading hub.
Right.
So
Right.
we get a lot of gold from Dubai, where all these SMEs make jewelry and stuff.
Right.
We also sell a lot of products there. So in my story, I have given a lot of numbers. The numbers are not coming to mind right now, but the West Asia is very important market. Because of the uncertainties, trade has
Come to a
almost come to
standstill,
a
really. Yeah.
standstill. And we have the Indian companies running great showrooms there in all the West Asian countries, the
Countries.
jewelry
Yeah.
showrooms.
Jewelry showrooms.
Dubai is also is one of the important diamond hubs, uh, because Dubai, for whatever reasons, has attracted a lot of businesses from, say, Europe, Asia, as well as Africa.
Right. Right.
So
So it
it's
has
a
become a nerve center for a lot within West Asia,
anything happened,
and
and
it's
they were
now
all.
closed too.
I'm just writing a report on the Dubai real estate market and whatever is happening. For them, they never thought this will happen.
Right.
Uh, it has taken them by surprise.
Yes.
So it will take some time for them to adjust. But Middle East or West Asia getting into trouble is very big trouble for India.
Yeah, clearly,
So for
the
many many
regions are
reasons.
really interconnected, culturally, trade-wise, etc. Well, I think we'll have to leave it at that, Lal Tendu. thank you so much for trying to make sense of what's happening in the markets, particularly the National Stock Exchange and the Bombay Stock Exchange, and also, the Reserve Bank's intervention with this sort of falling rupee. And I think we'll keep having these conversations. We'll try and come back and revisit these various strains of on the economy. But for now, thank you so much for joining from Bombay.
Thank you so much, Kunal, for having me. Thank you.